it's been a really interesting recovery from COVID. So we've had markets that are now 50% above where they were in 2019, and some markets that are still below where they were in 2019. And this bifurcation of the recovery has created really very interesting dynamics in the market overall. And so I think about investors coming back into the hotel market. There's plenty of demand on the value add side, opportunistic side, and we're getting ready for the core money to come back into the market. And really though now it's much more about a stock picking mindset onto deals. You've got to understand how those markets have performed, which ones will recover further. So where there's momentum, we see that in some of the historically more business-led markets. Which ones will tail off? Some of those tourism-led markets may now drop off a little bit. We move into Germany, very conscious that cost growth has outstripped RevPAR growth over the last 3 to 4 years. So it's a market where you just require that consistent and disciplined approach to investing. For a long time at Invesco, we've liked the hybrid lease approach. It gives you a fixed downside and it gives you upside through either revenue or profit-based leases on top of that. And for core investors, that gives you really an appropriate risk-reward balance for the investments that you make. And so we're seeing now the opportunity, but it's an opportunity where you need to be investing smartly and wisely, driven by market, brand, operator, all of the factors that come into play in good hotel investing. You could take more risk, you could go further. And I think we will see money coming through into management agreements. But on that, the core side, we think the hybrid lease gives people the right risk reward balance that they're looking for.